So I run a program called the Veblen Directors Program, which helps women, minorities, and first timers to get their first board seats. And one of the exercises that we do very early on is go and buy $100 worth of stock in a microcap. And it's not because I think they're going to make money on microcaps. It's because you realize how bad most microcaps are at communicating with investors in terms of what an investor's interested in. So they might do a great product demo because that's what they're used to doing, but that's not what an investor needs to see to make a decision. And I also sort of strongly recommend kind of doing a little bit of angel investing. Not because I think you make any money from angel investing, but I think you learn a lot of lessons about thinking about things in a different way. And yeah, I think it is important. And I think, you know, we very much take the idea that as soon as you start looking for money, your stock is the product. And so you need to understand the client and you need to understand the problems that the client faces. And I think for most entrepreneurs, it's like we have this word investors, which is so confusing. Like somebody that sticks $5 grand into a company is an investor. Somebody that runs a $7 trillion hedge fund is an investor. Uh, they are not the same.
Two different things.
Yeah.
Yes.
And yet you kind of get into this whole and I think I set up another company to help people learn to raise capital because I believe the way that I believe the whole capital raising approach is predicated on something that worked 50 years ago, and hasn't really changed much since then. And I just don't think it's relevant. So to expand on that, if I mean you remember sort of in the 90s when a company went public, it was big news because finally we got mum and pop investors and other investors got a chance to get access to this deal. Um, and it was exciting. It was an opportunity. And there used to be politicians would talk about more companies need to go public so that investors can get access to them. Today, investors are just swamped with opportunity. There are no end of opportunities out. I mean, the biggest companies in the world are still growing at 25% a year and sitting on 100 billion in cash. Everyone else is competing with that. You've got real estate, you've got REITs, you've got every man, woman, and child is raising capital for a startup. So investors are not short of choice. So the idea that if you just come up with a great pitch deck and it gets in front of the investor, oh, now I was just here with my checkbook waiting for a great idea. It doesn't work like that. What we want is access to deals through trusted parties. Like we want somebody that we know, like, and trust to say, hey, I stuck some money into this. You should take a look at it. That's what we're after. That's that kind of trusted approach. And so this idea of kind of build a pitch deck and go knocking on doors, it's just, I mean, it's soul destroying to go through. And look, it's the same in public markets. In the public markets, the conventional wisdom is go to these investor conferences, stand up on stage, talk through your numbers, and hope that you inspire somebody to invest in your stock. But especially in micro caps and small caps, it's not like that. It's all done through relationships. And so building those relationships based on what investors want, not what you want, but what investors want is in my mind is the only way to bridge that gap. Otherwise it's excruciatingly painful.